What's up, everybody? Oh, here I am talking to myself here. Just doing some yellow lines real quick. Maybe we had like such a cool little straight run rally. It's looking a little messy, right? There's a whole bunch of them. So let's see what we got in the vicinity here. It's just my reference chart on Thinkorswim. Just so I can keep them there, and then I just translate them over. So the technique is, I should have clicked live so I can watch me do them. But this is the illiquidity pivots technique that you will see in the Discord. Okay. So you get a lot of them. Let's go through and let's just mark up the reds now. Here. 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 Okay, delete the tool. Oh, we can do the thick one. You know, it's like, it's that kind of day where you watch like an alien movie, an alien invasion movie, and then you have a dream about being in the alien invasion, and then you wake up like freaking out, like, oh god, oh I'm alive, like hiding in attics and stuff with aliens trying to kill you. What's going on here? All right, this is what we got. I got a span of some upper targets here. We got 8, and these are some old ones. 42.54 and a quarter. Okay, 42.54 and a quarter. Let's just mark this here. Clone. Wait, sorry. 45.24 and a quarter. That's a little bit better. 45.24 and a quarter. There we go. All of this for that. Good morning. Is it Triple B Day? It is not. Yes, it is. Oh, yeah, it is. You're correct. The Tuesday before the third Wednesday, which should be today. It would be tonight. So after the session, we'll recalculate it for tomorrow's morning session. When VIX monthly option expires tomorrow. Tomorrow morning. For those. So it's the night before that. Good eye. I forgot, this is a month that started on a Wednesday. So it would be the second Tuesday of the month that is that month you do the calculation. Monthly maps have been showing an imminent squeeze for the longest time, right? And finally, you know, CPI just kind of runs to the area of least resistance here. So if you go to the monthly map, you'll see that my gaps are all drawn. Oops, gaps are all drawn here. But you can see that there's that general downside, right? The bottom of these grays and the bull side zone, and the bottom of these, top of these light grays and the bear side, both sloping down. And as we know from our cheat sheets, the sloping down on both sides is a short squeeze and longs accumulating at the same time. The path of least resistance is up, has been that way for a little bit. DD ratio has been 99, like straight pegged out. Am I trading? I would be trading, yes. If something lines up, I'm gonna be trading. Now 60 points is a lot, and I don't normally trade outside of DD bands, but something like this is huge. So whether the market decides to fade this out or not, I will be looking for opportunity off of long pivots. Still a bull, still looking for that good run there. I think days like this typically find the high of the day, right there. Like typically it moves, you get another risk interval. Like here's the first move, right? We are in a catalyst mode. So let's go ahead and mark the catalyst. 31 points off the risk interval. Forgot to do that. So be right off the bottom candle there. So let's go ahead and mark all the pieces of this. So mark right here, anchor point. Let's go to the risk interval and double check. ES is 31, perfect. So we're gonna go here. We're gonna mark this. So we're gonna do the catalyst side of things. Let's make this gray. Let's clone this up. That's 4120, so 31 would be 4151, which should be here. This is your cat active line. The coordinates 4151. So we're just prepping for the day. We got 12 minutes till market opens. Oops. Okay, and let's put a little text note on there. So it's a catalyst from that point forward. Okay. Yellow's here. Yeah, I'm just kind of drawing everything there. Get ready for that. Cat active with an actual cat. See, the cat is active. Meowing in the background. You know how it goes. Okay. All right, getting ready for the market to start. Got about 8 minutes going. Just chilling right now, giving it some time. All right, 6 minutes to mark it up. Don't forget, guys, smash that like button on stream. Give us a subscribe. Follow the channel. We're live every day.
Listen up, you D.
Oh, God. Oh, God. Fuck yeah. Ashton's building some content for TikTok. It's fucking great. Alright. Alright, welcome, guys. Alright, let's get ready to go. Alright, don't forget yearly 60% off for Black Friday for this couple of weeks that we have this going on. Let's you guys check it out. That makes it 60% off. That's just our best we ever do every year, once a year. I blasted that so loud, and Ashton's like, I could hear that through your stream. You heard it for like 2 seconds. Our TikTok content. Hold on, I'll let you hear something funny. Hold on. Just I'll let you hear just like one second of it.
Listen up, you D-gens.
That was some loud videos there. All right, cool. Let's get ready to get started. Listen up, you D-gens. I love it. Yeah, so essentially, right, in here, just to pre-market, get ready to go in 3 minutes. We're going to look for setups off of the cat lines. All that work this morning was just a setup for this, right? So clearly, catalyst active, you know, et cetera. you know, we have some pivots there, some pivots there. This is the anchor point down here. I'm going to mark that really quick. Clone, anchor. Yeah, right here, right here. Okay. Okay, that's not what I wanted to do, but that's kind of cool. Oh. Background text here. Background, no background. There we go. And of course, we'll have liquidity maps. We have a gap fill at 45.44, which is going to be about, or sorry, 450, which is about 40 points higher, about the 20 range. So there's a SPY gap fill very close to this yellow line as well. So we've got those as targets here. Resistances today. Now, if I were to take a guess, right? Let's just take a guess here. The market is, you know, whatever it does, it's probably going to try to push higher and then start chopping here. And then futures will probably fill that gap overnight. Remember, we have VIX monthly expiration tomorrow. So in the morning, tonight we'll have the BBB update. So that'll be a whole new ball game. It's the Tuesday before the third Wednesday of the month. All right. Okay, let's get the opening data pulling through here. Okay. Okay, we got our liquidity maps in. Oh, we are blasting the bull zone. All right, so this is one of those days where it's just like wait for something good to happen. Let's do some trade plans real quick. We know all the setups, right? We have. Let me just draw. You know how to do this. Let's get our cheat sheets out. Repeat this behavior. Repeat after me every morning. Get out your, or don't have to repeat after me. Just follow my lead. Every morning, get out all your cheat sheets, right? Start at the top. DD, open in bull zone. Bull zone is support. Easy as that. We're going to draw a line from bull zone support to next resistance. Bull zone support to next resistance. Already looking good. Next is going to be resilience. So obviously, clearly, resilience is opening up nice and chunky. 64 on the top side. We'll go to my resilience here, and we'll see that resilience being greater than 0 and rational, which is good. All of our lights are rational. Let's check. Well, we're outside of DD band, so irrational, greater than 10. Taking a look at that, we're going to have to say greater than 10. We're certainly greater than 10 on both of those. So we have that as support to next resistance if we have that, or half gap to here is support, which is just like that, right? This is on a dip to half gap. So half gap long or open long is really worth buying. Don't want to hold 20 points upside down on some micros, maybe to get something out the door, maybe. The last thing is the BLU, and we all know how BLU works. BLU is if you support the open, you go to next resistance, which is just like the resilience play. They go in confluence. If you open, blue open, that V shape is also a trade. So there we go. So out the door, one of the options we can do. Appearing rocks here. What's up, y'all? What's up? What's up? What's up? DGen's trading on the DD break today. There you go. On the future side of things, like we have supports here. Now again, ideally, I'd like to grab the hedge pressure. Now for here, the R&R is pretty decent. If I do long for here for that 30 points at the end of the day, there's a very high probability that I could get dropped right to where hedge pressure is about right here anyways, above the cat line, to take that trade, which again is another 30 points. The question is, do I want to put in a little bit for a big 30 run or miss out on the 30? Would I rather miss out on that or get in on something like that? So the idea is I kind of want to wait and get in on the pullback because I'm going to get a pretty solid pivot. And clearly we have volatility expiration today, so we're going to get some pretty clean running of the market as VIX just decays practically to nothing to squeeze all those calls out of the money. So I think we're going to rally. I don't think this is going to pull back and fade at all because this is happening on Expiration Eve. So you know how that goes, right? Oh yeah. So I'm just going to wait for the pullback. Would I short the... No, I would never short this. I would never short a move that's pushed forward on a catalyst. I would never, 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 never try to fade something that's... Oh my God, no, never. Bull market running up, there's no reason to try to fade. Even if it does fade, it's more likely... Remember, when your catalyst is active, this is irrational up here. This is one of the biggest problems here, irrational. Welcome to the stream, everybody. Irrational, okay. Okay. Irrational here and here. So while it can fade, I know you should never bet that it does. I never, ever, ever will bet a fade off of something like this. Okay. Nasdaq's in the same boat. Hedge pressure. The setups on hedge pressure on Nasdaq, same way. Open, blue, open, just like this. I'd rather get a long from there. I'd rather actually start building my long in pretty early. We're irrational for many, many different reasons. I do believe we're going to probably rush up to fill the gap here today. I don't think this is going to pull back or fade at all. Even if it does, it's going to fight its way lower just a little bit. And it's VIX monthly expiration tomorrow, so you're going to get volatility just collapse. You're going to see calls getting squeezed to like the maximum right here. So catalyst is active here, and this is going to be a really, really, really powerful, violent kind of move. So what I'm going to do is I'm going to just miss out on any upside because it's moved way too far already, and I'm going to wait for a pullback to the areas I'm going to enter in long on. Fading it. Problem with fading it is you have no target to fade it to. Something that's this strong, you have to go 30 points, a whole risk interval just to get to the DD band. Like, that's a long trek, so I don't bet on that. Now, that doesn't mean it can't fade. You have no gauge that it will fade. That's where I tell you. It's a great question, though. Does that make sense, everybody? Now, resilience dumping would be an indication that we could fade, right? So other than that, if resilience shits the bed, which it looks like it could, there could be a fade trade. But one has to argue that the fade trade only goes from here to there. And then you have to see what's going on. Now, if resilience is negative enough, it can actually break through hedge pressure as well. So at the end of the day, you can fade to half gap. The problem with fading is that you don't have anything to fade off of. You just got to jump in and set a risk to the reward arbitrarily. So you basically have to just kind of jump in when you feel like you need to jump in. You don't have anything to fade off of. You see what I'm saying? Like normally on a gap fill, you can short right at the gap fill, or you hit a target, you can fade off of it. You're kind of in no man's land. Like, where do you fade from? And it's not a terrible idea, but then you know the possible upside against you is really, really far, and you're just in a trade hoping that resilience tanks. So you just kind of want to be in waiting for that to drop below zero so that it does drop out. But even remember, markets are irrational. You need it to be less than -10 to lose confidence in it. Irrational markets, which is light reds, or lights are red in the irrational rules, mean that you need a little more fat on your indicator. This is still good enough to hold this. Now, it sucks that it's not 30, 40, 50 on an 60-point move. But at the end of the day, it is only talking about half gap, right? So it's just some stocks have been fading enough, whatever they are. Let's see what they are. Let's look for the scanner. Let's go to half gap breakdowns. We'll find out which stocks they are, right? I love my tools. These are so easy to find stuff. Which stocks are they? It's like the high volume runners. Who is fading us today? Intel. Ooh. AT&T, Dell. We get some Verizon. We get some big movers today. Dropping half gap. A lot of stocks, but still, the flux is still positive, so we're still okay. Yeah, so the idea is that learn a lesson from me today, everybody. Everybody, don't forget to click the like button on the stream, friends, and don't forget to subscribe to the channel. You can watch us trade on the Rocket Scooter platform every morning. What you'll see here today is an opportunity for you to learn something. Market is moved. Okay, I got to make some money, right? Everyone, we should fade this. Let's just watch this, right? Notice how my hand's off the mouse. I don't have an itchy trigger finger. I'm not like, I got to do something. I'm going to miss out. Oh my God, I'm going to miss out, right? I'm waiting. Fading, trying to fade this to get a trade. Not the best idea when everything's looking bullish and solid. What if you just sat out and you wanted to fade it and then you just watched it fade if it happened and then say, oh, okay. Man, I would have been right. But you didn't even take the trade. The lesson is you don't have to take the trade. If that makes sense. You can paper trade it in your head. Think about it without actually executing. Sitting out is one of the most hardest skill sets to learn, to practice on. Right now, feeling like I'm going to miss out on something. I need to do something. I need to get on a trade. I don't need to get in on this. This can just be a day that it moved too far, too fast. I'm going to wait for a better opportunity, right? 60-point runs like this have possible 30, 60-point drawdowns, right? It's not a nice, clean, easy to see day. This could be the worst day of my life if I pick the wrong decision, right? So we're gonna do here is just wait. If it starts fading back, I do know the bull side is stronger, so I can sit back and watch it fade. I'm gonna start building into a bull position a little bit sooner rather than later, if it looks good, right? So waiting is always more important for what you want than anything. It's like I said, you know, anytime something moves, your brain shouldn't be like, okay, ooh, how am I gonna capitalize on this, right? Catalysts are active. Here's our rules in the Discord. And these are it. If you guys haven't checked out the Discord, the training yet, let me show you a little bit about what we have in the Rocket Scooter side. This is going to train you all on trading. You're going to learn a lot of really valuable techniques. Let me log in and show you what it looks like. So on your dashboard, on the actual website itself, you have all these courses. You're going to learn all these different techniques we do. So these are the most up-to-date courses. I encourage everybody to watch them. We filmed them the last couple of weeks. You're going to get a really solid education on everything we do here, every tool. The older courses are here in our Discord. Feel free to join our big Discord. 5,500 people here. So in the section where you can learn about all the tools that we have in the curriculum and the summary, you're going to see that there's a couple of different places, sections here, where you have irrational rules and usual rules and pivoting equations. So all of our tools are here. There's 15 different tools we teach, and they all mean something different. Right now, you're dealing with like an active catalyst and a DD band break. And so on this list, everything ranked near the top is the highest priority, near something ranked at the bottom. You have an index catalyst, the second highest thing on this list. So the market is completely irrational on an index catalyst, which starts from here. Trade small, if at all. I mean, this is not a day that you really want to make big decisions on. Outside of DD band is number 3. These are 2 high priority items, right? So these things, like outside of DD band, says index futures are trading outside DD band cause irrational and random moves due to high probability of margin calls. Okay. Spontaneous, unplanned, or planned news event indexed greater than 1 RI from the anchor. These are 2 things we're dealing with today, right? So each one of these items here has courses on it, videos on it, telling you what each one of them are. And if you go down to the reference guide, each one of these things has its own little list for its index catalyst. Here's a little lesson on that. All right, let's go and clean this off a little bit. Actually, how do I one-click hide? Oh, there we go. So here, anchor point, the moment impact of a sudden liquid move, rapid buyer seller overload for whatever reason. Market starts moving really lower. You have an impact red line, which that is on this graphic is not the correct red line. You guys would know that. So in either case, red line, your catalyst is active here. That 1 risk interval distance, your catalyst is active right here. So anything down in here, the market can get choppy and just flail around and get crazy and irrational. See how the market is choppier here than it is here. It's tighter. Like it moves up and down like a lot tighter. Here it moves up and down a little looser. The break point between here and here is the difference in a catalyst. You're gonna have wilder swings typically when your cats are active. Okay. That's basically what we're dealing with right now. So you don't want to be, in each one of these things, DD band, which is the other You have tons of infographics and you know, information about how all these tools work. So outside of here, it's really not that good of a region to trade in. But at least with the CPI, let's go over the numbers really quick. Just while we're here. 4% on a 4.1. Market isn't really moving, I would say, on that. And that's the core. And then the CPI is 3.2 on a 3.3. Slight beats. And why the market rallies so hard on these beats, it's because of VIX expiration. This is just a run on calls. VIX calls, there's no volatility. The market is just decayed. The VIX has just decayed so hard for the last trading month right here. I mean, we just, once monthly maps started showing the squeeze was back, you know, in here, we just had that confirmation. Ash and I were right here. We got scared because monthly maps flipped into a very strong bear market and we got this choppiness. And then right here, it closed back in and said bullish. And so VIX just squeezing out. That's just nuking VIX calls into monthly expiration, which is tomorrow morning. And so this is just going to be a liquid free day. You're probably not going to get a pullback. If you do, it'll be the luckiest thing in the world, if I can say anything at all. So this is just like I said, this is a run on squeezing VIX calls. Nobody expected this sudden break in volatility. Imagine people last month, right? Imagine last month's chaos. And everybody's got VIX calls ready for the market to collapse, and then they just got crushed, right? And they're going to continue to get crushed today. So very, very, very low probability this turns around and fades out, in my opinion. How you get these red and yellow lines? I drew them on the stream earlier. You can rewind the stream and go check. Those are the red and yellow line techniques from the Discord. You do them manually and calculate them. What's up, Cheyenne? Good morning. Are the videos still in Discord? They are on the website now. So all the videos are on the website. We made some announcements about that. All the newest videos. So make sure that you go to your dashboard. And you go back to your courses here. And you'll see that pretty much the newest, most up-to-date videos are here. Entry rules, some exit rules, some unusual rules, BBB, something dealing with today, dynamic for futures, some other stuff as well. We're trying to make it like really simple on the website going forward. Unfortunately, I'm just going to miss out on today's trading day and not really do much. Appreciate all y'all being here, friends. Make sure you subscribe to the channel. Everyone hit that subscribe button real quick. And don't forget to like the stream because we have a lot of people here. Appreciate y'all tuning in. Obviously today, very easy to predict the direction, see what's going on. Everybody is like, should we fade this? And not that I give you investment advice, but I kind of was like, right? Trust your indicators. Don't trust your gut. Trust your tools. The tools are telling you everything you need to know. This is a gap and go if there ever was one on SPY. I drew those arrows right when the market opened 23 minutes ago, and we've been sitting here watching the same thing all morning. I haven't changed my mentality. All these arrows you see on the screen clearly come from our liquidity map cheat sheet. If you guys don't know how to use Rocket Scooter, I'm telling you, we have this amazing Black Friday deal. We have an extended trial. You can try for 35 bucks. It's $200 a month otherwise. For 3 months, you can play with this and use it for 3 months if you want. Learn all these tools. I promise you'll never look the market the same way again. When we go to the website, we have a 60% off of yearly and 20% off of lifetime. This is all Black Friday stuff. You can get the platform, your data feeds, everything. The liquidity map, BLU, I just drew on the BLU what it shows right here. In the market, nothing tells me I want to fade this, right? Remember, not always are you going to wake up and look to fade something. Yeah, if you guys want to check out the platform and just play along with it right now, you can. If you want to run some tickers, if your first day here, it'd be like doing a little demonstration. Throw me if it's your first day here, right, and you can type in the stream, give me a ticker that you want to look at. I'll show you how to do a liquidity map. This is so much fun. So first day here. Maybe somebody like who hasn't seen it. You've seen it a bajillion times though, right? Amazon. Tesla. Okay, we'll just show this for a couple people. Liquidity map is using options to show positional risk in the market, and we can use that to find flow price or flow of volume to influence price, right? So let's look at this guy right here. We have something called a BLD. Okay, so I'm going to translate what I see here onto the chart. There's an open price, which is the diamond. Blue back to open, right? Or sorry, to yellow. So open has some particular downside to there, back to there. There's a big pressure wave like that. If it were to break here, it's going to lock inside of there. And so if you're down here and you break through there, it rallies pretty crazy. But we didn't open down in here, so this one doesn't apply. So now I'm looking for, and of course, if you support at the open with velocity, you're going to go to next resistance, usually like a gap fill or something. So clearly we open, we're down in here, and so Tesla is just like not actionable. Like I would love to get some longs. It's just like my S&P trade from there. I'd like to get longs off of pivots that are lower. But inside of here, there's no reason to try to scoop up a long anywhere unless there's a good actionable pivot to long from. See how that works? So that's it. And I'm looking. So Tesla right now is unactionable, nothing to do. I'm waiting on this one. Okay, so we'll do another one. Somebody said Amazon. Type it in. Pops right up. Amazon, same boat, BLD, except Amazon's the one that's going to the upside. So we open, we support at the open and rally up. Amazon's just like the SPY. I would have logged out the door if I was taking it. Let's find some upside targets on Amazon. Do we have any gaps or anything to fill? And we kind of do, actually. Right, this is pretty simple how you do this. Oh, we already beat that. Okay, that's already done. Anything up here? Is Amazon at all-time highs right now? No. No. Is it? No, it's not. No, okay, never mind. I was like, wait a minute. There's no way, because I know Amazon traded a whole lot higher. Why is the data not going back any further than September? Hold on one second. I'm putting a note with this. Yeah, so we're rallying up. Let me get the target for you guys though. So yeah, Amazon upside moves. Even looking on monthly map for this, take a look at what the monthly map projects what Amazon's going to look like in the next month, which is really cool. This is one of the best features. The reason we tell people, if you need a reason to check out our platform, this is the one. Monthly maps is worth on its own the membership, because it's going to give you insight into the way something's trading into the future as positional risk changes over the future. Bottom of this bull zone is sloping down like that. Longs are accumulating longer, which is exactly what you're seeing. It's a rally. The top of the bear zone also sneaking lower, which means bears are exiting positions or a short squeeze. It's a double powered rally. Shorts are exiting, bulls are longing. Over the next 4 weeks, it's already set up that way. This is going to be bullish for another month. That is the power of what monthly maps do. And as far as like anyone's diet and trading, it's always good to have some forward-looking indicators. They're looking at how positional risk changes over the future. This is looking at the options of it. So, pretty neat. So you guys check it out. At least try the extended trial. That's definitely worth it. The link is in the description below. There's that 30 points move we see here. What is going on with my it keeps minimizing my my charts for some reason. Stop minimizing. My computer's acting really weird for some reason. Sell each, okay. It's stuck in this bear short up kind of situation where these are pivots right in here. I'm also thinking so. Right? Yeah, I mean, like a day like this is just going to keep rallying. I mean, that's pretty easy to see that. It's VIX expiration with VIX calls and decline, you know, that's just basically what you're looking for. It's the VIX expiration day. Moderna, okay. Not actionable, kind of stuck in the middle mean reversions. So this is just a flat, no action trade. We actually don't even have a bull zone in the vicinity. So Moderna is not really actionable except for support off of here, off of the bear zone. All right. So hopefully everybody, not that that was trading advice, but you know, when people are saying maybe this would look like a good fade because resilience, you got to trust that something that's moved 60 points mechanically in a day where volatility is just collapsing and there's no VIX pivots, nothing in the way to insinuate that they're going to be volatility or pullbacks or any of that. And then you can just see that the market just kept going. The only reason I didn't take it was because I don't usually trade outside of DD bands when markets are irrational like this. I told you at the beginning of the day, I said I could put 5 markers into it and maybe have gotten, you know, 20 points off of that. But I didn't fade that, right? So we're going to be smart when we trade. No reason to fade anything that's this powerful or even think about it. And it's like the lesson is just because something moves, it's not like, okay, let me distrust or let me get in on it, let me go the other way. It's more like, you know, see what is and really just kind of focus on what's in front of your face. Sometimes a day like this, it's even better just to let it ride. I mean, I've made a pretty significant amount of headway in my small account challenge account, so I'm not really in any hurry to give any of it back, especially when, you know, when something moves this much. You tell yourself, if you're wrong, it can move that much. So it's, you know, days that move up and down 20, 30 points, I love. Those are great days. I'm not going to hit a lot of drawdown if I'm wrong. Especially non-volatile days like this. There's not a lot of downside moves that are possible, really, without volatility. And so I tell myself, if I'm going to be upside down 60 points, I can nuke the entire challenge account in one day. Days like this go irrational outside of DD bands. That's what these red alerts are for. They tell me trade small if I do anything at all. So I just throw a couple micros at it and not really worried too much about it. Every day is a trading day, so you don't have to hit all of them. Heck, they just kind of watch and chill. So, but yeah, this is pretty dope. That means market's moving. Not afraid of this. Any pullback, let me tell you. Anything that you see here, what's this day likely going to look like? If it does anything, it's probably going to keep going. I don't think we're going to fade any of this at all. I think that's going to anchor us pretty solid. I think we're supporting this area at all. I don't think we're going to lose the cat by any means, but you can. I mean, these little like support waves here. This is the open price of SPY. And as crazy as it is, remember, what if you just jumped in on a long here, you just lost 10 points? Doesn't look like a lot, but that's a pretty quick dip, right? What are you guys looking at today? So let's take a look at the numbers in CPI. Actually, analyze that really quick. Year over year, I mean, I guess in general, that's seen as, that's seen as pretty good. We had like, the last 4 months were upticks. So I think the market was a little concerned that we were building out, more inflation. I think that's pretty nasty downtick on the year over year. Now, again, let's look at the month over month to actually see what the real data is. That could just be an artifact of the year over year calculation. And you can see that the CPI, month over month, there was no growth. So that's actually the real reason it ticked down. That's incredible. There has no growth on CPI. It's at 0 month over month. Huge change. That's incredible. At least for trading perspective. And it was just enough to catalyze like a big run like this. So that's CPI. Why did I click that twice? Oh, core. Okay, core and year over year. I had that twice. Where's core? There we go. Year over year core, just dropping down. So this excludes food and energy, which is a big source of the inflation. So this is everything else. Still on the same downtrend it's been on. That month over month is sitting at 0.2. It's just pretty much the lower end of the spectrum of what it has been. So the economic data came out pretty clean and good, at least for the long haul. The Speaker of the House is shut down. Yeah, a catalyst would kick us the other way, right? So this is just a neat little monthly maps, liquidity maps play. There's really not much to take off of this one other than, wake up in the morning, market's already moved significantly on a catalyst. You want to squeeze out another trade or two. There was 30 points run on that initial open play. I don't take it, because if you're wrong, you can be wrong 30 points, right? Whether you're going to fade it or long. And everybody here, did you sit out or did you play? What did y'all do? Everyone type your trade. Did you short? Did you long? Did you sit? Did y'all do anything? Out, out, out. See, everyone here, y'all so smart. Y'all are all so smart. Everyone watches this show. It's like you get it. Y'all are learning how to be traders. You're not learning how to be TikTok traders or Twitter traders or, trade room traders, people that are always looking for plays. You're being smart traders that are looking for things that make sense, that are predictable. Once you have control of your trading, that's a whole different ballgame. Took a long scalp and now CPI retrace the MT. Nah, you don't learn a single thing I teach. There's no indication to fade something that's moved this far. It's a coin flip. So you can do anything that you want. In this mode, irrational catalyst, everything you do is a coin flip. You just basically, if you want to trade, you could pick any direction and you have as much probability as someone that picks the other side of your trade. It's completely unpredictable. And as long as you have risk management, you can do whatever you want, as long as the reward and risk is there for your appetite. But there's no indicator that's telling me to fade a single thing. Now, NASDAQ is trying to drop down and fill its gap, so that might give you some clue that the market's losing momentum, but it doesn't. It's still there. In general, there's not a solid sign that just because something has moved, I want to kick it the other way. I've never had that mentality. Maybe I did when I was a newer trader. Like something moves, okay, let me fade it the other way. It's like as I got better at trading, I started learning that you want to agree more with what you see than disagree more with what you see. The newer traders in the world, not saying you are, but like when I was newer, it's very easy try to doubt what you see. Like, okay, it's dropped really quick, let me buy the dip. Or it's rallied really far, let me short this. And the reason for that is that it's just a naive mentality of you're just kind of looking at shapes and kind of curve fitting with your brain. Like, okay, maybe I can get some reversal here. But you start realizing that price action doesn't usually lie, and it represents like what's really going on. So as you learn as time goes by to just agree with the price more than disagree with the price, and if there is no opportunity to long, like I'm like, oh, man, I really don't see anything I can long from or long to, then I just sit out instead of trying to gamble in the other direction. The more I tried to fight the market, the more the market kicked my ass. That's a great thought. Yeah. I know, I was like, you shouldn't be, but yeah, no. Went short, gap fill, looking for quick scalp, small fake, expecting a retrace. Okay, that's cool. Most penny stocks will play. Yeah, like that's it. But in general, I just realized when I got better at this, I stopped trying to arbitrarily choose the other side of the coin just to pick, well, what if it goes the other way, right? I tend to say this is 60 points to the long side. Where can I get it on the long side? That's important, right? Okay, so don't forget to subscribe to the stream, friends. Not that S&P, baby. That's right. Res doesn't affect. That's correct. UVXY redistribution zone. We don't have any. There's no resilience for that. There's no. You're correct. Resilience is just for an index. It's for a basket of something, right? It's looking for how the difference between the instrument that tracks the basket and the sum of the basket itself. To look for discrepancies there. Somebody sent me a message the other day in Discord and said, there's a group of people trying to reverse engineer your stuff and give it away for free. And then I said, who is it? And then they named who they thought it was. And I laughed my ass off. I think that every wannabe trader out there who sells indicators and whatever. It sells like garbage like Elliott waves and harmonics. And they copy that shit. It's all open art. And they call themselves programmers. I would give somebody, literally, I beg somebody to try to reverse engineer hedge pressure. That'd be awesome. I challenge anyone to try to. They never come close. I wish they could. But then I just said, oh, that's crazy. I guess indicator sales for absolute dog shit must be down, so people want to watch what we have and try to sell it. I guess they saw us grow to 5,500 users in the first year, and now they want to figure out how to grow their little rinky-dink business. It must feel weird slowly fading into obscurity as technology runs circles around you, but I guess that's great. I open challenge anyone that even tell me how they think it works. That'd be great. But that was cute. I was like, I think that just kids like to have fun on the internet. But apparently the named party was just some washed up indicator salesperson that sells like this open art concoction. They like took 5 open art things and crammed together and packaged it up. So I guess they're trying to, I guess that is a trend with them, taking other people's work and selling it. I get weird shit. Once we got big, I get a lot of weird shit come at me all the time. Oh, I don't know the person they mentioned. I mean, I know of the person they mentioned. No, nobody knows of the person they mentioned. They're nobody. But I thought it was funny. I was like, okay, and I'll tell you guys how I can literally tell you how hedge pressure works, and they still want to be able to redo it. That's the best part. I mean, I talk about it all the time. Like, who uses harmonics? Like, who? Like, I just can't even. I mean, if you want your stock chart to look like an arcade game in a Pizza Hut in the 1980s, and by all means, but I don't think that's really smart trading. It's like shit like this. Look, here you go, guys. Let's do some math. And there's your pattern. Don't forget you have the XABCD pattern, and make sure you get all. Look at this. We're gonna make sure that this is all correct, right? This is stock markets follow math patterns. Just be careful. They're entirely predictable. Because of that, I can write an algorithm that wins every trade, and here's my infinity dollars I've made, and you can buy it for, you know, $300 a month. Yeah, if SPY were to drop, you're currently expected to bounce edge. If SPY were to drop, I'd be looking for open to support if res is still positive. But like right here, there's really no obvious place to go long on. But I told the random message that somebody said, just letting you know there's a group of people trying to figure this out. I said, there's always a group of people trying to figure my stuff out. And I know this is going to sound real judgy, but Ali knows. Ali's an engineer. You just know, it's easy to sniff out who's smart and who's not. You can tell by the way somebody speaks, or by the way somebody presents themselves, or presents their elegance and their calculations as intelligent. Like, the more intelligent you are, the more elegant your outputs are, right? Your solutions are always well defined, well described. You can explain things simply because you master your craft. And I look at people like, I'm like, oh, it's a very, the mathematical complexity would completely go over the head of the person who they said, because I was like, I went to their website and looked, and I was like, oh God. these guys are playing with crayons. We're doing calculus. Ain't no such thing. Ain't even come close. What I find inspirational in the trading world? Probably Jim Simons. He's just like me. He's a math guy. And he built something that was substantial and changed the game. Like, I love that idea that you can create something with substance. And Brady Rogers, that's who inspires me. Brady says, yeah, you can tell who's who right off the bat. And well, I told the person that messaged me, I said, well, let me give you a hint. To even build the infrastructure to calculate the data, depending on how you build it, you're already looking at 10K, 15K plus a month in just overhead for just crunching the numbers. It's like, I'm like, what are you guys going to do? Like, code it on a spreadsheet or something? Okay. You have to create a whole system just to roll up the data, to parse the data from the main feed. There's not a computer on the planet that can crunch Opera's main feed in real time. It doesn't exist. It's too much data. There are entire companies that exist just to roll up the data to make it usable. Like the real-time time and sales of every options trade. For like SPY, for instance, every strike, every expiration. Imagine SPY's time and sales, just a flickering of numbers, right? For people buying SPY shares. Imagine the tens of thousands of SPY options each with the time and sales like that. And that's just for SPY. So like, there's no computer that can process data that quickly. So the infrastructure alone, I mean, you got to, I'm like, well, good luck, kids. Get out your crayons. Let me know how. Reach back with me a year. Because I remember in 2019, people were like, "Oh yeah, there's like, I'm totally gonna." Some guy was in chat like, "I'm gonna figure out how you're doing this, and I'm gonna sell it to you." I was like, "Go for it." I don't know what happened to that guy, but people like to just. I think they just troll, but whatever. We have a good stuff. Like what we made is really great. Took many years to make it. Took years to build the infrastructure. I mean, we can even patent our technology on that because we built something to do that. That's half of the magic, is the machine that does the calculation. Not even the calculation itself, it's the data handling. It's no brag, but I mean that design is a stroke of genius by itself. Of how the data is compiled for use in the calculation. Are options trades somewhat limited? Well, any trades are somewhat limited to that. I mean, you don't. Okay, let's talk about every trade is a buy and a sell. Every trade is a buy and a sell together, right? Somebody bought and somebody sold. That's what makes a trade happen. But what you mean is it hard to tell if the trade was bought to open the option or shorted to open the option, or was the option traded hands? Think of it more like that. It's the way, a better way to think of it, because there's more than two choices. So if I bought an option that didn't exist, then somebody had to create it. Now it's in circulation, so I have it. If I short an option that didn't exist, I created it and circulated it. If two traders hand an option to each other, then the option already existed there. It's hard to tell the three of those things, actually. Did the option exchange hands, or did someone create it? Did the buyer create it, or the seller create it? Those are the real powerful pieces of knowledge that you want to know. Yeah, like, or was the option, even, I guess another side effect is this option part of a spread? Which part of this option is to take risk? Which part of this option is to not take risk? Right, if you see 100 calls pop up, or say like you see like a call trade pop up and a call and a different strike at the same time, you're like, okay, well, is that a credit spread, a debit spread, or two different traders? Is that trade together? You can't really see the organization of the options trades as well. I guess that is another part of that. Sometimes you can, depending on how the trades are structured. I think you can, some of that spreads and all that are reported, I think, through the because I know when I remember I used to look at the time and sales in Thinkorswim, you could see like a little bit of extra data, but it's not, you don't see a lot. Like, it's hard to tell. Let me go to like my little monitor here. Options, time and sales. Let's see like the most you can get. But yeah, you literally have limited. So you have to write your own stuff to kind of see that. Yeah, you have to go, like as AVL, as you said, you have to go the extra mile to make those analysis. Like, you have to write something that guesses based on the best information you have. So there's a condition, like in the time and sales on Thinkorswim, it shows you a condition, like if it comes in as a spread or not. Like if the order is submitted as a spread, I think that condition does make it through the feed. But not all of it does. Yeah. Well, like I said, imagine like how quickly you're running the time and sales for just something like SPY. So imagine like the entirety of the stock market. Every stock, every option, every expiration. Like a stock is, you know, got a time and sales. It's just massive feet of wall of text. But imagine every stock has thousands or tens of thousands of options that each have their own wall of text. So imagine analyzing the entire stock market of those entire tens of thousands of options on each stock. You just can't do that. So like for somebody to want to copy or create something like this, I say good luck. It's such a rare thing to parse that much options data that very few people in the world even do it. It's big companies that do it and have the money and resources to build that infrastructure to do that. It's like not just something you can just whip up in a local machine, right? So a lot of data. Yeah, I'm about to call it the day as well. As far as thing to do is make sure you reconcile the batch of trades for the day to the next day OI. Yeah, see, the way that you're taking it is showing your understanding kind of how the system works, right? You have to create something that guesses what's going on because you're in the dark, as you just reiterated that fact, right? Then you don't know the OI until it's reported once a day. And the exchanges don't know the OI. And Opera only knows the OI at the end of the day after all the reports come in. And so there's even a dark period that Opera knows and you don't know. And then there's a period that we know before the market opens. And then throughout the rest of the trading day, you're fully in the dark. But you have to create algorithms that try to analyze the real-time data today for tomorrow's situation. And you're nailing it. Why do they look weird? I don't know. What year did I start streaming? 2016? It wasn't always on YouTube though. We used to do Zoom at that day. Always in Zoom. What do you mean, why do they look weird? They look alright. On your package, Cartmill, we explain this when you sign up for your data. We don't use candle data here. It's not for any calculation that we do. So we don't go out there and buy an expensive historic data package for candles. Candles are just for visuals. All we need is the active price. That's it. So if they look wiry or like they're not fully developed, it's because that's how you get your data for like cheap. We buy a lighter data package that doesn't have all the volume of the entire exchanges, and just in equities though. As a compromise, it's a cosmetic thing that you don't need for our stuff at the earlier phase of our company. The next layer of data, as we're going to release, will have like full developed candles, but you guys are all going to be forced into buying it at $5 a month, just FYI. So that's coming early next year. So everyone here, just FYI, you're about to be charged another $5 a month to stay on Rocket Scooter, because the exchange charges us for the data for that package. So we're about to get like the entirety of the SIP feed, which is all candle data. They won't. So that answers your question, Chase. Sorry, Chase, that was for you. So early on, right, with like a $35 price point, it wouldn't make sense to, and like early on as we launched the company, it wouldn't make sense to have all of that infrastructure for something that's just cosmetic. Yeah, if you're locked in price, that's the one thing. We'll be charged on your behalf for the data. So you'll have two options. You'll either be thrown into a delayed data package for the same price, or you'll just have to upgrade. That's the one time that we'll ever have to raise a price for people that are locked in. We can't avoid it. So if we pay $5 on each one of y'all's behalves, imagine me getting a bill every month for like, 20 grand additional just to give you fuller candles. So the answer is we just don't do it, which is why we didn't do it. Then we voted and everybody said, yeah, we're cool, we'll pay $5. So it's all or nothing thing. You either deal with what we have, or I update and you guys get it. If you guys don't pay for it, we're not going to update it. That makes sense. That's the rule there. Like, just for it to look nicer, so we don't use the candles for our calculations, right? The prices are done with options data. The indicators. It's just a data feed, yeah. Is it mandatory to pay? Yes, it will be. Correct. The exchange charges us per user of that data. So we're just going to pass the fee on to you guys. It's not for profit. It's the exchange fee. This data fee doesn't have an exchange fee per person. So like phase 2 of the company is to have the bigger data packages, but they're a lot more expensive. All right, nice, easy, clean day. We love you guys. Make sure you head to the Discord. We'll call it. We'll have a Zoom call right at the end of the day, like we usually do. Love you guys. We're gonna call it. No trades today. Sat out. Didn't fade it. Kind of figured out what's gonna happen. It made a lot of sense to just leave it that way. But yeah. So don't forget Black Friday special. 60% off yearly and 20% off a lifetime. Big deals. And we have our $35 a month just extended trial. You can try us out for 3 months. Get the liquidity maps, monthly maps, and all the tools to play with and have fun, and learn something about trading, risk management, position management, all the real skills of a trader, not just reading charts and drawing pictures on them. Good stuff. We'd like for you to check us out, and we'll see y'all later.